So I'm Lidia. I'm the Chief of Staff and Business Transformation of FintechOS. It doesn't have anything to do with people, just for you to know. Before we start, I would like to thank the very few brave people that has bared with us till very late in the afternoon. So thank you. I would like each of you to introduce themselves shortly, because we have only 34 minutes left. So, please, thank you.
Hello, I believe it works. I'm Madalin Staniu, I'm from Black Bullet and I represent a cybersecurity company. We deliver cybersecurity services for our clients in Romania and abroad. And we help them to strengthen the digital posture and the digital footprint in the internet.
Hello, my name is Adam. I'm representing GFT. GFT is a great company that builds numerous banks, not one, not two, but more, all over the world, including Salt Bank in Romania.
Hey everyone, my name is Eliad. I'm the founder and CEO of Coriunder. We're a backend as a service for financial institutions. We help EMIs with our core banking system, from everywhere from onboarding, managing the balances, issuing the IBANs, the prepaids.
Hello everyone, I'm Ionut Hrinca. I'm now a chief architect of the bank. I had a journey of 18 years in Romania. I starting with ING and seeing evolving in this new digital era. We are pretty proud that we had quite some disruptive initiatives in Romania in the digital new era in the banking services.
Richard Caven, AWS.
So, thank you so much. I will start with the only banker on the stage, with Ionut. So, Ionut, based on ING's experience, arguably the first digital bank, what would you say that are the pain points of the customers that the neobanks have successfully managed to address and incumbents have yet to, to come from, to gain some advantage. And, I would like to have your opinion when it comes to the challenges and the opportunities that neobanks do have and manage to offer superior customer experiences.
Yeah, so I think coming to your first part of the question, I think we need to look a little bit at our role. And our role is actually to offer a simple and seamless, let's say, service to our customer, which has actually a need. And if we look to what actually we are offering to the customer, we think that we are offering actually the services, the financial services. But does the customer really want this? So, or actually we are helping in satisfying a customer need, which is actually not necessarily related to a banking service. So I think it's really important to find this need. And when you have this not accomplished, so either you have a complex or not a seamless service which you offer to the customer, or actually you are not focusing on the need, actually, I think this actually becomes some of the things which actually create, let's say, a burden to the customer, so they don't get necessarily happy with us. So that actually creates the space, both for let's say, the neobanks, but also for the digital banks to explore more. When we look at the opportunities, I think I think it's nice and that the whole world, it's spinning, it evolves. There are new opportunities, especially in the tech area, and I think these opportunities are very well leveraged by the new neobanks, which actually it's nice that they also create some pressure, right? Because they, even if they start light, they actually put a constructive pressure also for the incumbent banks to actually bring this and enhance the digital experience towards the customer, solving actually a need, not actually offering a financial product.
We had before in a panel Salt Bank, so Adam, because everybody knows the collaboration that you have with them. How do you see keeping the human touch connection between technology and the consumer in the future? Do you see it compulsory, or do you see it as a nice to have feature?
Okay, because before I will answer the question, I would like to clarify one thing. I am considering myself also as an old-fashioned banker. I spent I'm based in Poland. I spent 13 years at ING, building the #1 bank in business banking in Poland. Then I moved to Vodeno when I was responsible for building the Vodeno and Ion Bank. So we managed to build not only the bank, but also its own core banking system, including banking as a service. And now I've joined this great company, GFT, that has built a lot of banks. And yes, and actually what you say, it's mandatory, this human touch. And actually referring to ING, like 10 years ago, CEO of ING, Bruno Bartkiewicz, he was always saying, people don't need the bank, they need banking. But 10 years has passed, and what we see today in this conference, it's not customer-centric, it's life-centric. Yes, so the banks don't want to be in the customer center, but they want to respond to their needs. Because at the end, I don't know if anybody on the salon is like desire to have a mortgage. I don't. Yes, but everybody desires to have a nice house to live. So this human touch is very, very important, and we see it in the South Bank, where it is very, very important not to have the chatbot, but real agents that can help you. And also during these panels, we had a great example, like for example, somebody is dying and you need to resolve some banking or other issues, and then you want to talk to the real person. On top of that, for example, we also see in the Trust Bank in Singapore, what we see, we have introduced, because you need to know something about the Asians. They love coupons. If you go to AliExpress, there's coupon everywhere. And most engaging section for the Trust Bank by Standard Chartered is not like checking the balance, but those coupons where you can save like €2 for the lunch, 10% for the coffee. And this section is the most important for the clients. So the answer, yes, it is very, very important.
Yeah, so we all agree, I think, that digital banking, neobanks, equals significantly, I would say, equals innovation. But innovation comes with a lot of challenges, and I would like to hear from Madalin. What do you think that are the most, from a cybersecurity perspective, the challenges that a bank that just is starting up or at the very beginning needs to consider and to address at the very beginning? Because otherwise, going along the way we know, or we think we know.
Thank you. This is a very good question, because the neobanks and the digital banks right now are quite innovative, and let's keep in mind that what today is innovation, tomorrow will be legacy. And I would like to give you an example with the ATMs that a few years ago it was a top-notch technologies that you can, from a small plastic card, you can access your money in cash. But now we are relying more on technology and digital currency and, of course, cashless transaction. So basically, answering your question, right now the most important thing when you have in mind the cybersecurity, and the bank should address challenges and solve this by having the opportunities to build a neobank and a digital bank, is to think about cybersecurity from the scratch and have the cybersecurity by design from the beginning in their processes. Because it's not related only to technology, it's related to the process and human interaction. Human computers and processes, they are quite most likely like assets in the organization. So you need to secure the assets. The next thing, as I don't know, the most complex attack with artificial intelligence, you should take a look for zero trust architecture. ZTA is the help you to I don't know, to avoid the other problem that the market has it in at this moment. And of course, we need to take a look of the supply chain, because the most of the attacks happens in the supply chain. We need to secure our digital footprint of our clients, customer, and to protect the data. Basically, considering that the bank is over-regulated in not only in Europe, there are highly regulated everywhere. Compliance and governance and compliance should be in place from the beginning. Security by design in terms of building architecture, zero trust architecture, and of course, let's take a look of the people, because the people are one of the most important and vulnerable asset for not only banks but for the company. So basically, these three: technical point of view, compliance point of view, and people point of view. These three, I would like to have it in mind when I start to hopefully to build a new bank.
Thank you. I mean, it was very interesting for me. Eliad, how do you see the consolidation of services when it comes to neobanks?
Comes to
Neobanks.
Yeah. So first of all, like my friend here, going back to the first question, I'm married to a banker, so I think I'm also kind of related to that part. Now,
Can you talk in the mic?
I will talk to the mic. We do see a lot of the challenges, or let's say I think consolidating of services when it comes to the neobank, but let's say personally I'm more involved in the SMBs in banking, and we do see a lot of consolidation of expense management, CFO services coming into the banking sector. So I see a lot of neobanks offering the ability to upload invoicing and pay the invoice directly from the account. We see them connecting their third-party providers such as crypto assets, etc., into their banking offering, getting those SMBs logging into the banking portal rather than just to do 1 or 2 transactions, spending more time there, managing their balances, managing their payouts, managing their pay-in, cash flows, and more of that. And I think in a combination of how they face their challenges, they're helping the SMBs not just by providing a bank account, but also by providing additional services for them to actually use. So we see a lot of banks, or let's say neobanks, offering pay-in solutions in multiple payment methods. We see them offering fund distribution through multiple chains and networks, so that gives them a lot more functionalities and a lot of usage to actually expand the business.
You have started talking before about life-centric economy, and Sergiu, our co-founder of FintechOS, talked earlier in the first session of today about life-centric economy and how the consumers do expect that financial services are blended into their day-to-day lives. This meaning that, you know, banks will just migrate from open banking to open finance and to life-centric banking, if I may say so. How do you see neobanks addressing the life-centric finance or life-centric product management, Richard?
So thank you for this opportunity for group therapy, because my name's Richard Caven and I am also a banker, or at least an ex-banker. To answer your question, so we're going through the gears, right? We've had open banking has been around, certainly in the UK, for 10 years or so. If I'm really honest, I don't think it's really achieved very much at the moment. But I think it is a key enabler of open finance, which I think has the opportunity to deliver more value for customers. And I should say, one of the reasons why I'm not a big fan of open banking is that I don't think it changes bank customers' lives. It doesn't really make them richer. It doesn't really put them in greater control of their finances. Open finance, I think, gives the opportunity to do that, because you begin to, when you start talking about pensions and long-term savings products, you can begin to offer higher value advice around open finance, which means something to customers. So changing your pension provider may be worth a couple of £1,000 over the remaining life of your working life. So that's enough, I think, incentive really to get things going. I certainly also then think that open finance, life-centric finance will evolve and mature from that in time. And we have got a number of customers who we're working with to build APIs and interfaces which allow them to more easily partner with different organizations. So two really obvious but great examples, I think. We're working with banks to enable finance to be embedded in the car purchase and the car ownership experience, so that it becomes more seamless, so that buying a car is less about finding the finance and more about focusing on the car itself. The same can be said of house buying as well, which in most countries is a fairly tortuous experience with a lot of administration and documentation, not least around your loan. If you can engage with customers at an early stage, which takes a lot of that administration away and allows them to focus on the thing that really motivates them, which is buying the home for their family, then I think there's some real value to be added there. And that doesn't even sort of begin to touch some of the simpler, smaller transactions like embedded finance for retail purchases, buy now, pay later and the like. When they are done well, and I mean well from a technology perspective, so that the customer has a seamless experience and the product is calibrated to give value to the customer rather than just a high interest loan opportunity, then I think those are really good opportunities that we know that customers like and we know that financial institutions can deliver against.
We know that customer centricity was always on ING's radar. So, Ionut, how is ING prepared for a life where financial products are accessed and they are consumed and demanded outside the usual distribution channels?
Yeah, you rightfully said that we are looking at customer centricity in a customer centric way. And actually, if I think to our business, actually we are not in necessarily a business of managing finance and more money. We are in a business of trust, of actually managing the trust of our customers. And I think they, in their daily life, they use us to fulfill their needs, but they are also bringing their life into our hands. Because they, if we talk about private individuals, most of the salaries comes via the banks, and they do all the shopping via the rails we offer, but also they put their future, because they save, they evolve, they invest. And as life gets complicated, also there are more and more complex products which the financial sectors offers. And I think this here it's a journey. And it's a journey also for us to understand how we should operate in the future in these ecosystems of platforms, because the life of the customer is not a very segmented way. So actually we need to create a seamless experience for the customer for the journey of satisfying a need. And I think it's really important to see how and what are the innovations in the future also to better integrate. Like Richard was saying, we didn't really succeed in the open banking yet. But I think there are some steps, and we had some learnings, and I think in a future we can better prepare to see how we be more integrated in this ecosystem for our customer.
Since we are all very honest about us being or not being part of a bank, I used to be a banker myself for 15 years. And I started in a very, underrated area, which is payments. So talking about life-centric economy and life-centric banking and so on and so forth, how do you see, Eliad, the payments? How do you see them evolving and meeting these life-centric expectations of financial services?
As I started saying earlier, so the ability to give the merchant, let's say the SME account, the ability to receive funds to his account from multiple channels, that's part of the evolution that we see a lot of providers opening up. Open banking was, let's say, we do see a lot of traction, at least from the merchants using the platform through our clients on that part, but not just for initiating the payment, but also for account information to facilitate, let's say, faster, let's say, transitions of funds. on that part or applying for accounts much quicker. But if I look at, let's say, the ability for the merchant to distribute funds and work with freelancers globally right now, which is part of the financial services that they're getting with startups like Deal that facilitate cross-border payments to work with freelancers, because right now the economy kind of forces you to work with people outside of your country and not just locally. Those services consolidated within the banking experience open up the market even more and give the SMEs a lot more opportunities on that part. So again, we saw, I think, some of our clients are using 7 or 8 different payment methods as a facilitator to allow their client to both pay in and pay out from the accounts, and not just traditional SEPA SWIFT transfer, but a lot more than that with conversion between currencies and between wallets and between accounts on that part.
So it's clear that satisfying, the customer needs, being there when they need us, and using the best of breed technology to service a certain need are key elements. However, when it comes to technology, Adam, the age-old question: partner or develop?
Okay, let me answer as a banker, because as a leading word system integrator, you could say that my answer is biased. And I love this analogy of looking into IT engineers as for the construction workers. If you ever had a not pleasant event to build a house or to renovate the house, and you hire one team, and then you're asking to change something with other team, what they always say: oh, it never works, you need to build it from scratch. This is what they say. Exactly the same IT guys. They will say, you need to rewrite the code. So that's why I believe that choosing the right partner that can lead you from end to end in this journey is very crucial. And keeping the analogy to the construction, if you would like to build a house, and this is exactly with the banking, with the new bank, would you prefer to take a team that is doing for the first time, or you're taking the team that is doing for the 5th or 10th, like we together with the Richard, we've built many, many banks right now, yes, together with other partners, like Thought Machine, Mambu, or Engine by Starlink in Romania with SALT. But these are like a core partnerships, but at the end, you always have like microservices that you build the neobank, and you need to have this individual approach to verify build or buy, because there's always a trade-off in that, and the trade-off is in terms of the money, on time, quality, meeting your requirements, regulatory requirements. So yes, sometimes you want to build something, but at the end you want to work with the partner. But keeping this analogy to the house, it never ends, because building the house, fortunate for us, it ends. Building the bank, it never ends. You need to change, you need to react to customer needs. So at the end, as a bank, you want to have the team on your side, not on the partner side. That's why we at GFT, we work together, and this is exactly what we're doing with the South Bank, to make them also self-efficient. So we can pass our experience, we can pass our know-how to the team of the South Bank, so at the end, we call it BOT, like Build, Operate, Transfer contract. So at the end, they are self-efficient, and they have in-house developers building and making the South Bank even better.
I want to add something just because the example you gave at the beginning. So I got a chance to build 2 buildings in Tel Aviv. So part of the joke is it's not just one team to replace another. It's about synergies between teams, because you have specialists for each part of the building, and the same goes for banking or online payments and everything. It's all about the synergies and the orchestration between them. So it's not one team replaces the other. It's knowing to work and be open-minded to say, I'm not the best of every type of the things I need within building the bank, but I'm good at orchestrating the different levels to go to those specialists. The one does KYC, KYB, the one for AML, for scoring and everything else, and to build that tech stack together. So I don't think there's one entity that can do everything perfectly, but you need to know how to work the teams and choose the right partners to everything, and that will streamline both processes and allow you to innovate a lot more than that. Because legacy system, when you build everything in-house, you can be a specialist in everything. You can be mediocre at everything, or you can be amazing.
I also want to express a point of view, leveraging on what you are saying. Actually, if we look back a little bit, when we started digitalizing our banks, Actually, we were at that moment innovating. So we created a core banking system and so on. But things gradually, so those innovations became, they went, I would not say viral, but everybody adopted the technologies. And things got standardized. Yeah, the way we looked at an account, we get standardized now. If we look to payments, there are a lot of standardization across. And things evolve, and what actually was innovation in the past now gets, it's being commoditized, so you can consume it. But I think it's while we are actually an engine in the innovation, which runs and thinks how we can improve, let's say, the customer experience, we really need to create the space, so to free up for the things we can now actually become commodities, and because actually created quite opportunities for others to pick that and do it in a quite efficient way and offer it as a service. And I think it's a transition, and also what we focus now, and we try to innovate in some areas. I'm pretty sure that in the future it becomes commodities, and other things are next to be focused on and to be the next innovation. So yeah, building as for house, I'm pretty sure that even if you use to continue with the example, even if you use the workers and you build synergies with this, also you need the raw materials, and they get standardized. You get the bricks, the different size, and they are built by others, not even in your company. And I think it's a nice, and I think it's a nice comparison when it comes to the financial services, building a house.
Yeah, just food for thought. What about, and I don't expect necessarily an answer, what about helping the customers to be self-sufficient on a piece of technology, like, for example, or build on what you said, Eliad, it's about working better and, creating synergies amongst the teams and doing a greater job, an excellent job, so that the others to come, and having a good product that then enables you to continue to build on top. I think it's also very important. So, yeah, when talking about technology, we need to talk about security. On a platform-based model, what would you say are the 3 top threats, risks that should be taken into consideration and addressed?
From our experience, this year we started the year with I don't know. We imagine that we need to sell risk assessment, security risk assessment to our clients. The first part of the year was related to fraud and forensic activities, because our clients, most of our clients from financial sector, doesn't have an incident response plan, and the first thing that they do was to panic and to call someone on the internet. So basically, they found us. The main risk that the risks that are in the financial sector, I reiterate, it's the third-party risk assessment vendor that it's a must to be done with I don't know, neurosurgical precise in each aspect, to take a look of the vulnerability, to eliminate false positive, to make a penetration testing for your core vital system in the organization, to test your policy and procedure, and this is done not by internally but external team, because internally could be biased results, and biased results will not help the entire platform to be that it exposed on the internet, to expose data of their clients and increase the attack surface. So the first thing is to take a look of the third-party vendor risk assessment. Second one is to have built-in procedure and policies that take a look of data privacy, and data privacy is important because, like, actual neobank are customer-centric, and Mercedes-Benz is also customer-centric. They are not building cars. It's secondary building cars, but they are customer-centric. They build cars for customers. Is to take a look of the data. The data is the new gold, and all of us, we are a data center on wheels with money on our device. basically. And the second one, of course, the regulatory, because the banking system started with paper security and now they switched to technical security and after that paper security to check the regulatory environment.
Oh, I wouldn't like us to finish this panel without talking light, I would say, about core systems. And when we talk about core system, we know very well that there are a lot of financial institutions that are held back by convoluted and highly costly core systems. Out of your experience, Richard, what are the best examples that you have witnessed when it comes to addressing this problem? I would say it's a significant one.
It is a significant one. It's funny, I've been at AWS for 6.5 years now, and probably for the first 4.5 years, nobody wanted to talk about modernizing core systems. It was just too complicated, it was too expensive, it was too risky. The kind of stuff that keeps all of the executive team up at night, worrying about whether it's going to work or whether it's not going to work. So it's funny how, in the last couple of years, their position has begun to change. I think it's changed for a variety of reasons. One's because I think that some of the core banking technologies and applications that are available from different partners, as was mentioned, have gotten better, as have integration specialists in terms of knowing how to migrate these legacy systems onto new systems over time. And I think there's also been a realization that at some point banks just have to grasp the nettle and make that change. Most, I can't probably say all, but most modernizations tend to modernize into the cloud for reasons we've touched on previously. There are 3 patterns that we see working. One we might describe as augmentation. So this is typically where a customer or a bank has got some constraints around its legacy core and needs to do something different to support it. We've been quite successful, they've been quite successful using the cloud to augment some of the capabilities. And that doesn't really transform the bank or modernize its core as much as make up for some of the deficiencies. But what that then tends to lead on to then is a second approach, which we might describe as migration. So them taking the decision that they need to come off their legacy mainframe technologies and move into the cloud. You can do that, broadly speaking, one of 2 ways. You can either lift and shift and effectively create a duplicate of your on-premise systems in the cloud. Many organizations choose to do that because they perceive it as simpler and easier, and in many ways that it is, but it leaves, I think, an awful lot of value left on the table. So you get value from going to the cloud there because of the resilience, the robustness, the security posture that the cloud has, which is typically stronger than most legacy systems. But really, to juice the value of digital transformation, you have to refactor those technologies. So you either do it when you put everything into the cloud, or increasingly we're seeing customers refactor as they move into the cloud, trying to do the 2 things at once, because it allows them to generate the value of the cloud much more quickly. We find that organizations that lift and shift tend to lift and shift and then go, do you know, that was hard work, we're going to wait a little while, and then you begin to lose some of the value. So that refactoring becomes and re-engineering becomes an important alternative. There is a third one, which is to create something de novo from scratch alongside. In other words, build a digital bank, and rather than migrate customers' data and your banking code into the cloud, you're effectively just migrating your customer data. So once you've built your new bank in the cloud using modern digital technology, then transferring the customers across to them that way. So they will be the sort of 2.5, 3 ways in which banks do it. And I will say that it's a very personal decision for each individual bank. There's no definitive right way or wrong way. It takes a lot of consideration of the constraints that the organization is under, typically people and resource constraints, before they can make those choices.
I feel like Adam wants to build on it.
I just strongly disagree with lift and shift. I think this is the worst strategy ever. Yes, if you wanted to migrate something to the cloud, this is the best opportunity to make your systems, legacy system, like 20 years old system, makes better and build new microservices that better respond to your needs.
I would agree.
I simply would never advise to my client lift and shift.
Well, we don't advise. We just provide them with the options. But for some banks, it's their preferred choice, so we can't ignore them as an approach.
From your P&L perspective, yes, this is a really good option.
I would agree with you.
So, Madalin?
And of course, add that extra layer of security that was not added from the beginning.
So I know that we have only half a minute, but still, Eliad, a lot has been said about core systems. In 30 seconds, what are the 3 top things that the bank, an institution, should look at when looking at a core system? What they should take into consideration? The top 3.
I think the first thing is user experience for the bankers internally for the procedures, because my wife keeps sharing about what she experienced at the bank itself, and I think that's the core thing we talk about at home, because sometimes the bankers themselves struggle to find the best solutions or the best products to give their clients in order to prove that. So the first thing when you migrate to a solution, look that your actual employees can do that. I was involved before I started the company in a project like this of changing an old legacy system into a new one. And it was a nightmare. The other thing is accessibility to your clients to integrate. It's API first, we mentioned that a couple of times here, and a lot of merchants want access, SMBs, wants access to their data, and open banking gives that to them, but sometimes the bank themselves can give some extra services on that part. And at the end of it, it's scalability. You need to see how you scale globally and how you allow your customers to do the work themselves, and I think that's the top 3 that comes to mind. With that red notice in front of me.
Yeah. Thank you so much to all of you, and thank you for sticking with us.
Lydia, we have one question from the room. Nick really insisted.
Hello, guys. You are
10 seconds.
the last panel.
No, we still have one panel.
Just come on.
Okay.
It's okay. So everybody's tired. Thank you again for coming to Sina, and the rest of you still here. I was listening to you guys, and my question in like 10 seconds answer for whoever wants to answer is, if I take FintechOS, I take Coriunder, I take ING, Amazon Web Services, Black Bullet, and the other company there, can you, not all of you, but some people from your companies can build a bank from scratch? So
yes.
if I put you in a room,
yes, we did it many times.
So you stay here in this casino for a week, and you can call whoever you want from your company. Can you build a bank from scratch, put it in the cloud, and develop all the flows, and make sure that we have the architect and everything? So what do you think of that?
That's
So
a
If we have
answer,
AWS
yes.
free credits, for sure.
Yeah, we might need more than a week, but these things can be done in months.
Months. No.
So this panel here can build a bank. You see how easy it is. Thank you very much.
That's why they are panelists, because they can do it. Thank you, guys. Well done, Lydia. Thank you. Amazing job.